Have you noticed something interesting? Whenever the world becomes uncertain, one asset always finds its way back into the spotlight: gold. And in 2026, global investors are paying closer attention to gold than they have in years. But why? Why are professional investors, central banks, hedge funds, and even everyday traders watching XAUUSD so closely? Let's break it down in simple terms. Because understanding gold isn't just about understanding a metal, it's about understanding how the world works. For thousands of years, gold has been considered a store of value. Unlike paper money, gold cannot be printed by governments. Unlike many companies, gold cannot go bankrupt. And unlike most currencies, gold has maintained purchasing power over long periods of time. That is why investors often call it a safe haven asset. When uncertainty rises, people look for safety. And gold has historically been one of those places. The first reason investors are watching gold in 2026 is inflation. Inflation may not always make headlines, but it affects everything: the food you buy, the fuel you use, the rent you pay, and the money sitting in your bank account. When inflation rises faster than savings can grow, the value of cash slowly decreases. This is one reason investors often turn to gold. Many see it as a way to protect purchasing power when currencies lose value over time. The second reason is interest rates. Central banks around the world constantly adjust interest rates to control inflation and economic growth. When rates rise, gold can face pressure because investors may prefer interest-paying assets. But when rates begin falling, or markets expect future rate cuts, gold often becomes more attractive. In 2026, investors are closely watching every signal from major central banks because those decisions can influence the direction of gold prices. The third reason is global uncertainty. Financial markets dislike uncertainty. Whether it's geopolitical tensions, economic slowdowns, trade disputes, or unexpected global events, uncertainty often pushes investors toward defensive assets. And gold is usually near the top of that list. Think of gold as financial insurance. People may not need it every day. But when uncertainty appears, demand often increases quickly. That is why headlines around the world can have a direct impact on XAUUSD. Another major factor is central bank buying. Many people focus on retail traders. But some of the largest buyers of gold are actually central banks. Countries hold gold as part of their reserves. Why? Because gold is viewed as a globally recognized asset that is not tied to any single country's currency. When central banks increase their gold reserves, investors pay attention. Large institutional buying can influence long-term market sentiment and reinforce confidence in gold's role within the global financial system. Now let's talk about the US dollar. The relationship between gold and the dollar is one of the most important concepts every XAUUSD trader should understand. Gold is priced in US dollars. When the dollar becomes stronger, gold can become more expensive for international buyers. This may reduce demand. When the dollar weakens, gold can become more attractive globally. That is why professional traders watch economic reports, inflation data, employment numbers, and central bank announcements so carefully. These events can affect both the dollar and gold at the same time. Technology and digital investing have also changed the gold market. Today, investors can access gold through ETFs, online brokers, futures contracts, and other investment products. This makes participation easier than ever before. As more investors gain access to global financial markets, gold continues attracting new audiences, not just institutions, but also individual investors looking to diversify their portfolios. So, does this mean gold will only go up in 2026? Not necessarily. No asset moves in a straight line. Gold experiences rallies, pullbacks, volatility, and periods of consolidation. Prices react to economic data, investor sentiment, interest rates, and global events. That is why successful investors focus on understanding the bigger picture instead of chasing short-term movements. Here's the key takeaway. Global investors are watching gold in 2026 because it sits at the center of several important trends: inflation, interest rates, central bank activity, global uncertainty, and the strength of the US dollar. Understanding these factors can help you better understand XAUUSD and the broader financial markets. Whether you're a trader, investor, or simply someone who wants to learn more about gold, these are the drivers worth watching. Because when gold moves, it's often telling us something important about the world around us. If you found this video helpful, subscribe for simple gold market education, XAUUSD insights, and weekly updates designed to help you understand the market with confidence. Thanks for watching, and I'll see you in the next video.